Hi, this is Merrill with Tax Tutor. I wanted to talk a little bit about the sale of a rental property and how that works for taxes. If you like this video, please hit the like and subscribe buttons below. So let's talk a little bit about the sale of a rental property. What goes into the tax considerations on the sale of that property? So over here, I've written some words, and over here I have some numbers. So we'll go through the words and the numbers and how they correlate and how everything works. These words are basis, depreciation, recapture, and gain. So where we start with on the sale of a rental property is the basis. Now your basis in a rental property is what you originally purchased that property for, plus any improvements that you've made to that property over the time that you've owned it. So that would be if you maybe remodeled the kitchen, or maybe did a new roof, or just had some kind of an improvement that went into that property. It goes into the basis if you didn't deduct that improvement when it was made. So if you had a simple repair or something that was done to it and you deducted that as a repair expense, then you would have deducted that as an expense and it would not increase your basis in the home. So we're looking at things that were not deducted when you, kind of improvements that were made that were not deducted. So here we have an example where we have basis where the home was bought for $300,000. There was $50,000 of improvements that were put into it. So now our basis on that home is $350,000. So that's where we start out with basis. Next, we have depreciation. When you own a rental property, you are able to claim depreciation on that property. Now, there's a little tricky wording in the tax law where depreciation is called allowed or allowable. So even if you own a rental property and you don't claim the depreciation, the tax code treats it as if you have claimed depreciation. So even if you haven't claimed depreciation on your tax returns, you have to show depreciation was claimed when you figure out your basis. So that's the importance of making sure you're depreciating property if you're entitled to, if you're allowed to. So in this case, we have $80,000 of depreciation in our example. So we take the $80,000 out of our basis and we get what's called an adjusted tax basis of $270,000. So when we go to sell this property, we're not looking at a basis of $350,000. We are actually looking at a basis of $270,000 because this $80,000 that we claimed in depreciation, we've gotten a tax benefit for. And the tax code says when you get a tax benefit for something, such as when you take depreciation, it causes you to reduce your basis, and now you take a lower basis when you sell a property. Now, when we go and we sell that property, we have to figure out the division between recapture and what would be our capital gain. So here's an example where if we take our basis of 270, let's say we now sell this property for $500,000, for $500,000. So we sell it for $500,000. We have $270,000 in basis, so we end up with a $230,000 gain on the sale of that property. Now, we can't count the entire $230,000 as capital gain. We would like to. Capital gain gives us really great preferential long-term capital gains treatments, so we would love for that all to be long-term capital gain. However, the tax code says, okay, that's great, you had $230,000 of gain. However, there was $80,000 of depreciation that you took on that. When you took the $80,000 of depreciation, you got an ordinary tax deduction. So this tax deduction came through as an ordinary deduction that offset your ordinary income. So the tax code says that you can't get capital gain for something that you took an ordinary deduction on. So it does what's called recapture. You have to recapture your depreciation, and that comes through at a special tax rate. Generally, recapture is done at your ordinary tax rate, which could be all the way up to 37% or higher, depending on whatever the top tax bracket is at the time. Currently in 2022, the top tax bracket is 37%. But as we get into future years and other things, that could change. So generally, recapture is based on that highest rate, or not the highest rate, but whatever your ordinary tax rate is. So if you're in the 25% bracket or 22 or 12% or whatever it is, recapture would normally be at that rate. However, for rental properties, the tax code gives a very special tax rate and says, okay, for recapture, we're going to cap that rate at 25%. So if you are in a tax bracket that's above 25%, the recapture will be taxed at 25. So this $80,000 of recapture would be taxed at 25% if you were in a bracket of 25% or higher. If you are in a bracket that's lower than 25%, then you'll be taxed at whatever tax bracket you're in, whether that's 12 or 22 or whatever that bracket might be in. That's where that $80,000 gets recaptured. Then anything above that recapture, so here we have an additional 150. So if we take this 230, we take out 80 from our recapture, we have a remaining $150,000 of gain that's on there. This becomes our long-term capital gain as long as we've held this property for over a year. We get this long-term capital gain, and that's what comes in at that preferential tax rate. Here in 2022, that could be as low as 15% or as high as 20%, depending on your tax bracket. If you're in the top tax bracket, it's at 20%. In future years, those capital gain rates may change, but that's kind of where we're at currently, is 15 and 20. So anyway, that's how the sale of a rental property works. We have to figure out what the basis is, and that basis is what we originally bought it for, plus any improvements that we've made give us our basis. We then have to minus out our depreciation to get to our adjusted basis, in this case $270. We then figure out what our sale price is of $500,000, and we minus our adjusted basis of $270 to get our gain of $230,000. We then have to divide that out between our depreciation recapture, and then we get our long-term capital gain. So that's how it all works for the sale of a rental property, and how you would figure out your gain and how that would all be taxed. And again, if you like this video, please hit the like and subscribe buttons below.